Welcome everyone. In today's video, we will cover GM, company with great prospects for the year 2022. All of you know this company perfectly well. It designs, builds and sells cars, trucks, crossovers and automobile parts worldwide. So let's discuss now why this stock is an interesting idea for 2022. First, let us see what the top Wall Street analysts have to say about the stock. Based on their analyst rating consensus, the stock has a strong buy potential, with 11 analysts calling a buy on the stock and 2 of them calling a hold. On average, they call for a 27% upside for the stock, with an average price target of $74.5. The biggest bull on the stock is currently analyst Itai Mikaeli from Citi, who has raised his price target to the Wall Street highest $96 from the previous target of $90 and calls this stock a top pick for 2020. So let's discuss now why so many analysts expect significant upside on the stock. GM is one of the several auto giants shifting away from internal combustion engine and going forward to electric vehicles. It has invested heavily in a robust pipeline that should see the automaker produce thousands of EVs by 2030. During next Computer Electronics Show in Las Vegas, we will all have a chance to assess how close the company has come to fulfilling these plans. On this show, GM is expected to present its new autonomous vehicle, as well as to show its updated Silverado EV truck. This truck is expected to feature new Ultium components, including Ultium batteries and drive motors. It is expected to have a range of more than 400 miles on full charge. Another big event for GM for 2022 will be the launch of Cadillac Lyriq 2023 edition. This will be first fully electric vehicle for Cadillac, and it will introduce new technology, a new design style, ability to park and unpark itself, as well as to drive on freeway without the driver steering the wheel, using a new version of GM's Super Cruise semi-autonomous driving system. So having covered the near and long-term prospects for the company as planned by its management, let us now move to looking at the financials of the company. With the current price share of $59.5 per share, the company sits at the market cap of $85 billion and PE ratio of 7.85. Having cancelled the dividends during pandemic, currently company does not pay any dividends, and the last dividend paid was on March 5th of 2020. During last 52 weeks, company oscillated in the range of $40 to $65, and the next earnings date will be on the February 1st. This is the day when we will also have additional understanding of how the plans of the company are working out. Company's beta is currently at a healthy level of 1.19, which means that this company is not much more volatile than the entire market. I like to see that because in current market conditions, I am not investing my capital into companies that could potentially lose their value sharply. Another metric that I'm interested into looking for this company is a forward PE ratio. This is a version of the ratio of price to earnings that uses forecasted earnings for the PE calculation. While the earnings used in this formula are just an estimate and not as reliable as current or historical earnings data, there are still benefits to estimated PE analysis. Basically, it gives us information of what analysts expect the price to earnings ratio to be for this company in the next 12 months. And what I'm also very interested to look on this top is the profit margin for the company, and currently it is at 8.5% as we discussed earlier. However, as we discussed, the company has a plan to increase the adjusted margins to 12-14% and to double the revenue from $130 billion to $280 billion by the end of the decade. So let us now look at the income statement and balance sheet of this company. As you can see, the company's total revenue was falling from $147 billion in 2018 to $137 billion in 2019, and to even lower level of 122 billion in 2020. However, as you can see, the company is now increasing its level of revenue to $130 billion, despite the still persisting issue of chip shortage. However, during the same period, the company has managed to keep its gross profit levels almost intact at 14 billion in 2018 and 2019, going down to 13.6 billion in 2020, and now it sits at the level of $18.7 billion for the last year. Provided that between 2020 and 2021 the total revenue increased only $8 billion. This is a significant increase in gross profit, and it means that the company is expanding its profit margin. This is also confirmed by the company's EBIT metric. EBIT metric is essentially all company's profits calculated before taking into account interest payments and income tax. So as you can see here, throughout the pandemic, the company has managed to keep its EBIT at 9 down to $8 billion, and currently this metric is nearing $15 billion. This proves to us that the company is true to its word of increasing the adjusted margins, and we can see it already in the company's financial figures. So let us now move to the company's balance sheet. Company's total assets currently stand at $235 billion, while company's total liabilities stand at $185 billion. Also, we can see that company's current assets stand at $81 billion, while company current liabilities stand at $79.9 billion, with total non-current assets standing at $154 billion and total non-current liabilities standing at $105 billion. This gives us net tangible assets at $39.8 billion, which also corresponds to tangible book value of the company. In simple words, tangible book value is the value that shows the amount that shareholders should expect to receive if the company would be bankrupt and it would be liquidated today. All in all, it shows us a clear picture that all companies' current liabilities, that is, liabilities to be covered within the next 12 months, are fully covered by company's current assets, while the tangible book value is significant, and the shareholders should not be afraid of company going bankrupt anytime soon. This is exactly the type of companies I'm currently looking at, because with the levels the market has gained recently, as well as still uncertain situations with the pandemic and the economic situation, I would not be investing my money into the companies without tangible book value and into the companies with high price to earnings ratios. Finally, let us have a look at who are the shareholders in the company and what are they currently doing with their stock. Here we can see that almost 5% of the stock in the company is owned by the insider holders, basically the management and other officials of the company, and 83% are owned by the institution. We can see the top institutional holders. They are BlackRock, Vanguard, Capital Research, Global Investors, and Capital World Investors, all the known asset managers. And we can also see that there is Berkshire Hathaway that owns almost 4.2% of the stock. And this is, of course, the company of Warren Buffett, an investing legend that only invests in the companies that have a true value potential in them. So all of this shows us that there is a significant institutional interest in the stock, and the asset managers are betting high on the company. However, we see here that there is almost 5% of insiders with the stock of the company. So let us now see what they are doing with their stock. And here we can see that the situation is not that good, as the operations performed by the officers is basically all of them are sales of the shares. So basically sale again, sale of the company, sale of the shares in the company. And this means that currently is not the best moment to be buying shares, and it actually makes sense with the market at all-time high. There might be some pullback, and it will also bring the GM stock price down as well, obviously. And this will be the moment that potential investors could be stepping in. And this brings us to the last point of our analysis, namely technical picture for the stock. As we can see here, the stock is currently range bound between $47 and $65. It has been in this range since 12th of January, and it remained in this range for the remainder of 2021. Currently, the stock tries to cover the target of 59.4, and if it manages to hold about this level, then a short-term target of 65 should be in reach. However, with the RSI standing already at this high level, it doesn't seem likely, and it is another indicator that currently is not the best time to be investing in the stock. I would expect the short-term pullback to 53, and this would be a great level to enter the stock. Concluding, GM is a great company with significant potential for further growth. Both company development plans for the near and long-term future, as well as the financial picture I have seen, make me bullish on this stock. With a bit of patience though, there might be a better entry point in the near future, and that is when I plan to be stepping in. However, please also remember that these are only my personal views on the stock and not a financial advice. Please do your own research before investing your capital. So that's about all I wanted to cover in this video. Thank you all for watching. If you enjoyed it, please do not hesitate to drop a like and subscribe to the channel. Also, please comment below what stock you would like to see in the future. Good luck on your trading and see you next time.